Hello stock investors. In this video, I'm going over 3 stocks to buy now. These 3 stocks are companies I believe you can buy and hold for the next 30 years. I'm eliminating most of the stocks that have crashed over the past 2 months. These 3 stocks are part of an overall portfolio strategy, which I'll link in the description below. So if you're interested in seeing that strategy, which I believe will be depression proof, click the link below in the description. If all goes well, then we should be able to make huge returns on this portfolio. The best part is, we will be able to make these returns passively. This portfolio will be your very own passive income generating machine. That being said, this is not investment advice, and please do your own research and invest according to your own thoughts. All right, let's jump into the video. The 3 companies I have chosen, in my belief, due to my analysis, should take your initial investment and multiply it multiple times throughout your life. I'm hoping these 3 stocks are like buying Netflix stock for $5, like buying Amazon during its IPO for $23, finally, like buying Apple during its IPO for $22. Well, I'm sure many of you watching the video know the significance of buying these stocks at those levels. For those who don't, let's do some quick math. Keep in mind these figures are including stock splits. For Netflix, if you picked up $1,000 worth at $5 a share in the months after its IPO, today, if you never sold, you'd have about $680,000 from your initial $1,000 investment, or 680 times. For Apple, if you picked up $1,000 worth at $22 a share during its IPO, today, if you never sold, you would have nearly $1.1 million, 1,010 times your initial investment. For Amazon, if you picked up $1,000 worth at $18 a share during its IPO, today, if you never sold, you would have nearly $1.3 million, or 1,300 times your initial investment. So yes, while everyone right now is trying to buy cruise line stocks and airline stocks and oil stocks to gain 100%, they are missing out on some of the biggest opportunities the market provides. They're missing out on the next Apple, the next Netflix, and the next Amazon. So let's jump into it. The first stock on my list is Tesla. Tesla to me represents more than just an electric car company. Fundamentally, over 95% of Tesla's market cap comes from its automobile segment. At Friday's closing price of $731, this represents $122 billion worth of the market cap with Tesla. Personally, with everything going on in the world today, I think this market cap is way too high for a luxury car maker. Even Elon agrees with me. See this tweet? A fair value for this segment in current conditions is probably closer to $60 billion. This would drop Tesla's stock price from its current price to around $400. This is because we are likely facing a recession, and it's hard to believe Tesla will still be able to sell its cars at the pace it currently is in the short-term future of 1 to 2 years. The next 1 to 2 years could see the stock trending a bit downward while Tesla weathers the storm. Furthermore, it has yet to be seen if lower gas prices will affect the sales of electric vehicles. Personally, I don't think this will be a factor due to the lower cost of maintenance of an EV compared to an electric car. Also, with other car manufacturers jumping into the EV arena, the question remains whether Tesla can survive the coming competition. Another Tesla segment is energy and storage. This currently represents around 3% of Tesla's stock price. Fundamentally, I believe the next 30 years will be great for this segment if Tesla can ramp up its position in solar. Long term, I could see Tesla being a significant utility company providing green energy. Arguably, Tesla could gain a gigantic market share of the energy generation industry to boost its share price even farther. Imagine if Tesla's energy and storage segment had just 1/10 of the revenues of the largest oil company in the world, Saudi Aramco. The final segment of Tesla's stock price is service, which is currently around 2% of its total price. Service will increase over time as more Teslas are driven by everyday drivers, and therefore, service should increase. Currently, I believe Tesla could reach a stock market cap of about $20 trillion over the next 30 years. Achieving this through EVs, solar energy, AI, and self-driving technology, and finally services. This video is oversimplifying the road to 20 trillion market cap, but it gives you my broad bull thesis. This would mean if you bought $1,000 of Tesla stock at today's price of $701, you would gain 172 times your money and have about $172,000. The next stock on my list is Uber. The first question that comes to mind when it comes to Uber for many people will be, why would I buy Uber when I'm also buying Tesla? Aren't they in competition with each other when it comes to robotaxis? Won't they be competing? Yes, they will be competing, but they will also continue to innovate to stay ahead of the curve. Innovation drives growth, which for us drives thousands of dollars into our portfolio over the years. I'm fully confident in Uber growing its bottom line for at least the next 10 years, with or without robo-taxis. I also like the exposure Uber has to the international markets. If Uber goes bankrupt, then I'm hoping that it was Tesla that caused it. I'll still win. Now, before I give you my last stock pick, I want to list 5 more stocks that might be great picks to replace Tesla and Uber in this portfolio. The first stock is GE. GE will need to focus on innovation and growth to succeed in the future. It will have to completely cut its dividends and reinvest everything it earns while building new business segments into renewable energy and automation. In the long term, I don't see its focusing on oil and aerospace driving profits enough for it to be included in the current portfolio. The second stock is NIO. NIO is Tesla's rival in China. It might be a great play if you're willing to take the risk. It could easily provide 50 times your current investment if it can match Tesla in market cap in the coming years. I personally believe it's getting into the EV game too late and it will suffer bankruptcy in the years ahead. The third stock is CAT. CAT could be a fantastic play if the US decides to finally invest in infrastructure. I don't believe the US will do this until people get really upset at the state of the country's infrastructure. This meaning that bridges are falling apart. For this reason, I'm not investing in CAT. The fourth stock is BA, Boeing. Boeing could easily provide 3 times your investment when the crisis ends, but I also think Boeing will see competition in the future from a new company that focuses more on safety instead of profit. Also, with a green future in mind for the world, BA could actually decline. The fifth stock is Amazon. Amazon to me might be the most outstanding play of the future, but at its current market cap, I can't see it getting any larger than 5 to 10 trillion in market cap. For this reason, it's already too big to invest in. It is nice to see that Amazon currently doesn't offer a dividend. That's true growth stock style right there. My final stock pick for the 3 stock portfolio is Adobe. Ticker symbol ADBE. That's right, Adobe. For me, this is a personal stock since I've used Adobe for the last 20 years, and I'm sure I will use it for the next 20. If Warren Buffett had Coca-Cola, I have Adobe. All right, everyone, I hope you enjoyed this video. Be sure to check out these other videos and hit that subscribe button. Until next time, this was James Germain. By the way, if you made it this far in the video, comment below with any stock that you have questions about, and I'll try to answer it in next week's video. I'll be giving you my opinion. All right, have a great day.